Hi, I'm Phil Anderson and welcome to my channel. I've been a property investor now for over 30 years and I've watched investors continue to make the same common investment mistakes. There's so many dirty tricks in the real estate industry and it's all caught up in a whole heap of sales hype. I want to cut through that sales hype and help investors avoid the common mistakes. I hope you enjoy the following content, but please remember to like and subscribe. G'day listeners and viewers across the country. Thanks for joining us. This is another episode of Street Smart Property Investing where we have a look behind the media headlines. We look past all of the sales hype and we try and uncover what's really going on in the property market around Australia. Now each week I'm joined by industry experts, people I know and trust and are top of the game in the fields that they specialise in. I've got one of Australia's most popular and successful property coaches, property strategists, whatever the title would be, Mr. Gordon Ruddy. We'll have a talk to Gordon in a second. And Mr. Trent Durrington, who, for more than, decades now, you've been looking hands-on. You've been hands-on with property markets from Melbourne in the south, right through up the coast to Queensland and so forth, handling hundreds of property transactions per year. You've got such a great experience on the ground. This week, on this episode, we're going to touch on a massive population shift that's underway across Australia. We're also going to cross over live and have a talk to, one of the most impressive real estate agents in one of the hottest markets in Australia, right on the Gold Coast. And he's got an amazing footprint on the Gold Coast. He's a real local expert. I'm looking forward to having a talk to Mr. Shane Colquhoun in just a moment. But Trent, mate, before we get started, let's touch on this population shift. What we're seeing at the moment is this transition, this flow that's coming out of particularly Sydney and Melbourne, record levels of population movement, averaging around 5,000 people per quarter leaving Sydney, 5,000 people per quarter leaving Melbourne. Pretty significant numbers and rolling out across, New South Wales and Victoria, and all kind of, at the peak of the movement, the biggest winner at the moment is Queensland, where everyone's rolling into. But regional New South Wales, regional Victoria, still very big success stories. What are you seeing on the ground, mate, in your acquisitions kind of world?
Well, it's, that shift has been happening for some time. It's obviously been accelerated because of COVID. And you've written about it and spoken about it over the last few years. But to see it now actually happening, talking to people on the ground every day, it's almost caught a little bit with our pants down as far as having enough stock for the shift. I'm seeing land that's registering out to mid-2022, even the end, people going on ballot systems. It's exciting in our space because, I guess that's what we've been preaching or been excited about the regions. And you mentioned Southeast Queensland. Affordability, lifestyle, the jobs, infrastructure spend, the money going into Brisbane as a city, which will become a destination. There's lots of layers, mate, to how this is stacking up. But I guess coming back to the problem now is the shortage of land. So in our space, we've been watching it happen. Sometimes I think, it's not rocket science, and it's not. But I guess we're on the ground talking about it every day, so we know these shifts are happening. But all in all, it's exciting. It's exciting for areas and our clients, and see them make some money. They've made some decisions, and if they've bought into those markets that we've been talking about, they're seeing good returns.
Yeah, absolutely. And you talk about it not being rocket science. And of course, to us, it feels pretty basic. We know the core parts of that recipe. But for you, mate, you've got years of experience. You've been, you watch things and you help me out enormously by being able to, I guess, screen and protect investors from, kind of dodgy builders and problem areas and, issues that most people, probably would have to have some bad experiences in. But now you're finding that mate, what must be 20 plus years of experience, it's all paying off for you because, and for us, because of your relationships with those same people.
Yeah, I think so, mate. You're right. I do take it for granted based on those relationships and understanding, how the shifts I've seen happen over those couple of decades. But, mate, I guess it's trying to stay ahead of the curve and seeing where the fundamental shifts are happening and where the big boys are moving to. And even simple things like the ABS and watching population forecasts, government infrastructure spend, where they're targeting, future growth strategies, watching all those key items and getting prepared to be able to offer.
It's not rocket science though, right? The thing is though, you have got relationships with the biggest land developers, the biggest builders, the real players out there, the ones that have built, household names, have got real integrity in what they do. They're quite strategic. They work, 10, 15, 20 years in advance preparing for these moments. So I know it all feels pretty basic, and I know that, you kind of get to see behind the curtain and see all that preparation that goes in and work with the engineers and the councils and all of those layers as they prepare for these growth corridors. But you're right, you've kind of, as good as they all are, as strong as all of these entities are, you have been caught a bit with your pants down. It's almost like, we didn't expect demand like this. This has just gone crazy.
No, it's the demand, the short supply, and also the yields, shortage of rental properties. Barring Sydney and Melbourne CBD, you've got outer suburbs and the regions that are it's a real problem.
Yeah.
There's I think council are very motivated to start, and they are, and they're showing that as far as their approvals and rezonings and things, and that's Australia-wide. But there's a real shortage of rental properties out in the suburbs.
Yeah, so this population movement, it seems like they are now very comfortable with moving to these big regional lifestyle cities, I guess. And I think you would probably agree that we're seeing the most significant changes in those markets where they have, good quality airports, good quality hospitals, all that infrastructure that anyone would look for, but they offer a whole new level of lifestyle at the same time compared to inner city living.
Yeah, no question. And it's been there, but people now, I guess they've opened their eyes to say, and they've visualised, can I live in that area and how's that going to affect my work, my income? What are the pros and cons? And there's, people are just saying there's a lot more pros.
Absolutely. I had a conversation with a professional gentleman yesterday, and our observation was, go back 10, 15 years ago, if someone said they were moving to a Port Macquarie, a Coffs Harbour, a Sunshine Coast, or whatever it might have been, those really strong regional cities that are evolving, there was a little embarrassment maybe attached to that maybe their business hadn't been successful or whatever. This is 15 years ago, right? Whereas today, when those same professionals are moving into those markets, everyone's envious. People are going, wow, good on you, mate. How great's that? You actually get to have a life, you get to have a fish or walk on the beach, play golf. Yeah. There's a whole new perception, and I'm excited by that.
Yeah. Yeah, no, you're spot on with that. It's the people in the grind in the cities are envious of the shifts happening to the regions.
Yeah, good on you, mate. Well, I'll just ask a couple of questions of Mr. Gordon Ruddy. How are you, mate?
Awesome.
Now, Gordy, that's great, mate. Gordy and I have been close, mateship, and also helping investors in various ways. We've got different areas of focus. I'm very interested in research and understanding the markets and looking at it through the eyes of an investor, the whole of the national property market, whereas you've always had a deep-seated interest in helping investors buy and navigate that space safely, what would be right for them. You've got a lot of compassion for what investors can go through when they get it wrong. So my hat's off to you, buddy. You're known for your big heart, and you've certainly I've seen 30 years of it firsthand. So it's congratulations for having such a great reputation and history in that regard. But tell me, those same investors at the moment, what have you noticed since this shift has started to happen out of Sydney and Melbourne? What have you seen, when you observe the habits and what the impact of that is to investors?
So the last 12 months have been really interesting for me. When COVID first hit, no one really knew what was going to happen. And I think we all saw it. Investors kind of went in, they did go into their shell a little bit. But as they've seen what the property market has done over, this last 12 months, but, even in the first 10 months of it, investors started going, hang on, how great is the property market? And in that time, they were seeing, like Trent touched on it, the properties that they'd purchased, over the last, 2, 5, 10 years, go, guys, we've got some serious equity that we built up in this. We need to, get moving. The confidence built, the enthusiasm built. They're really coming back, and they want to get into it. The issue is, and I just made a note of it there when Trent was saying about the shortage in supply and the demand that's out there, is that they really need to get ready. If they decide today I'm going to buy a property and they go and look at one, if they're not finance ready, the likelihood they're going to miss out on it.
Unfortunately.
And they really, so that's my, tip to any investor out there who's thinking now, well, get yourself buy ready so you don't get disappointed. Other thoughts, the things I've seen, you touched on it, or you touch on it quite often. An observation that you've made is that, the federal government made a decision a very long time ago that it wasn't going to help the housing supply, if you know what I mean. It's left up.
Yeah, they don't want to supply housing. They want private investors.
They want us to do that. They want mums and dads, people just like you and me to supply the rental market. And the big mistake I think they made last year with the incentives that they put on, they didn't give an investor any incentives. So we're seeing, in every day, maybe I'm exaggerating every day because I don't talk to agents every day, but every time I talk to them, all they can tell me is open homes, there's always, there's 20, 30 groups of people turning up, so many are disappointed, the rents are increasing. Now, we've seen that happen in mining towns and things like that, but this is a different story. This is not somewhere where that switch can get flipped back to no demand at no time at all. These are in areas where, there's solid pillars under these economies. There's not one industry that's going to turn that off. These are towns that are, that population is going there. It's going to stay there and it's going to keep growing. So it's just an exciting time.
Yeah, it is, and it's a exciting time from the perspective of the property market, and being a landlord in that market. We are fortunate enough to, obviously wear that hat, as well as obviously have various relationships with, now thousands of investors. And we're fortunate that over the last, recent years, we've helped investors buy hundreds of properties in those markets that are now doing unbelievably. And you think we'd be celebrating, but I actually feel a little bit of pain for the renters, because we are seeing incredibly tight rental markets where I think what we're going to soon see is terrible stories of families that just can't get a property to rent. There's going to be a crisis, well-known crisis level of rental properties across these regional markets, and I don't think the government's going to have much choice but to step in and say, hey, we might have got this a little wrong. We should have also, kind of given some sort of incentive towards the investors entering the market as well.
Yeah, that would mean that. I don't understand why they didn't, because what the issue they had was to keep the industry going. Mm-hmm. So it wasn't about giving, not that I want first home buyers and homeowners to get a benefit, but that's not what the incentive was for. The incentive was to keep the building industry going, mm-hmm. And there was no negative in giving some of that incentive to investors, and I personally think they made a big mistake. Well,
it's a public, I think it's a political question, and there's a, public perception around what they should do, and the Aussie battlers want to get into a home, so I can see what the incentive might be, but they may have gotten a little wrong.
Well, the only thing I would say that probably need one more quarter just to read that, because we are seeing the investors come back into the market.
Sure.
We're seeing
absolutely.
It personally.
Yeah.
So, you put
but without incentive, right?
Without incentive.
So they're competing against bigger numbers that have got some more incentive and so forth in an incredibly undersupplied market.
Yeah. But where I'm going with that is that the investor has got their confidence back and they're coming back into the market, even without that stimulus.
Yeah, but what what I was thinking about was the renter, like Phil was saying, is put them in a really, really bad position, because that's why we're in that position, because investors stop stop.
Yeah.
Yeah, there's a lot of contributors to that. I think with
Yeah.
this population that's flowing into, these regional markets, whilst it doesn't seem to be significant for a city to be, leaking, 5,000 people a quarter, when you see those numbers rolling into these, what are only a half a dozen or so regional markets in each of the states that are really benefiting most, those numbers are significant because, for every, 500 that roll into one of those markets, they've got to have somewhere to live, they've got to buy, they've got to rent, they've got to do something, but the stock level is so low, we are seeing historic lows of vacancies.
You can't forget the fact that there's over 400,000 expats that have moved home. It's probably pushing 500,000
Absolutely.
now, compared to the 170,000 we normally get. So, we're close to 3 times as many people have arrived in 10 months.
Yeah.
Over that period, which would normally take 4 years.
Yeah.
So they're buyers as well. They're not renting in a city like the typical immigrant that comes in to see where they want to live and things like that. So, they're getting COVID under control when the borders do open, call that 18 months from now, then you've got that effect as well.
Mate, there's layer on layer of benefit that Australia will enjoy because of how well we've handled the COVID situation. But just on the expat side of things, you're right, those numbers have well and truly buffered the, what was cut off when it comes to migration. And a lot of those expats moving back, we know, because we know them personally, people that are coming back from overseas retaining those jobs, still keeping those big sources of employment and having a choice of where they live because of this whole new remote workforce acceptability. Everyone's comfortable with that now.
Yep.
You can fly to Sydney if you're meeting once every couple of weeks or whatever the situation may be. So it's different time, guys. It really is. Any last comments on that before we cross over and have a little talk to Shane? Good?
The main, for the investors out there that are listening, the main thing is to, get a good team around you and get yourself ready,
Yeah, I think when you notice how important it is at the moment, my relationship with, the investors that are asking me questions, I would be in a pickle being able to get access to land and so forth, except for your relationships. And of course, we take some things for granted, these 20, 30-year strong relationships that we can draw on. Most investors on their own, they would be in a pickle right now. Everyone's so excited. Confidence levels have never been higher. More investors, one in 4 Australians want to buy an investment property. Adult Australians want to buy an investment property this year. But my gosh, try and exercise it. It's tough out there.
Yeah. Well, that's what we do, isn't it? That's what I guess we take it for granted, but we turn key it, put them in the great area, the great estate, the best, try to do the best street, the best aspect, all those sorts of things. And they set and forget.
Yeah.
And they become that lazy investor in that they just see that capital gain when the timing's right.
Yeah, and I think we take a lot of things for granted that we now are starting to go, hang on, there's some unique advantages that investors, obviously now need,
Yeah. Just on that, mate, I am seeing too that the yields, Southeast Queensland on a standard house and land for, 4-bed, 2-bath, double garage, we were comfortable with 4.5%, which is a good return. It's cash flow positive after the certain tax benefits. That's creeping up. I reckon it's crept another 0.5%. So,
it's a very rare time to see property prices rising and rents rising at exactly the same time. Very unique, unusual. Yeah. It's a new chapter. This post-COVID-19 period, it's like, COVID-19 has definitely changed the Australian property markets forever. It's a whole new world out there.
Yeah. But it is a whole new world, but also look at the trends previously in the different cycles. Yeah. And look where, if we're going to talk Southeast Queensland, when they caught up to certain median house prices of Sydney and Melbourne.
That vacuum's there. Those markets had a run, and Southeast Queensland, as one of the examples, it's overdue for growth anyway. So some rules do stay exactly the same. Yeah. Okay, gentlemen, let's cross over and have a talk to a gentleman that I've grown to know as, I think, the gentleman who has the best known profile in the LJ Hooker network, one of the most successful real estate agents in Australia. I know he gets a little bit shy when I start mentioning how much the rest of Australia holds him in high regard. But let's welcome via our live cross to Mr. Shane Colquhoun on the Gold Coast. How are you, Shane?
Great team, yeah. Great to check in again. Feel very privileged to be invited onto this session once again.
Yeah, good on you. We're kicking off the year and we said, who are we going to, launch with? And we said, we've got to have a chat to Shane. We know your market is obviously on fire. You are the principal of Nerang office, a very successful office on the Gold Coast, one that's a big award winner, as are you as one of the, the top agents in the whole of the network. But you're also got an involvement in five other offices around the coast. Is that right?
Yeah, correct. We've got Pacific Pines, Helens Vale, Hope Island, Coomera and Ormo. So good, what I consider the western corridor of the Gold Coast.
And that gives you an amazing, finger on the pulse of what's happening around the Gold Coast. And that, for us, is of a huge advantage. Property investors that are, obviously very aware of this population movement that we've been talking about on the podcast. And we've been talking about this transition of people with Queensland being the biggest winner. But inside of Queensland, of course, most of that activity is southeast Queensland. And number one for activity, the most sales in Australia was one of the suburbs of southeast Queensland. And obviously, mate, you're in the eye of the storm there. What's it feeling like on the ground?
Absolutely booming. There's amazing volumes going through in sales. Across our group, we're doing around 100 sales a month.
Wow.
And so you're right, it does allow us to keep a finger on the pulse of market trends. There's definitely an upward shift in pricing, and it's exciting. A little bit frustrating for buyers when you get 50 to 100 people through an open home in a weekend, and anywhere from a handful of offers to 20 to 30 offers on any given property at any given time. Very, very hard to be buying homes when you've got that sort of competition going on.
Yeah, it's interesting because there is so much talk, and obviously we specialise in helping investors and researching what kind of is happening with through the eyes of where's the best time to be, what markets to be moving into through the eyes of an investor and what that investor experience would be. And we're really excited about southeast Queensland in general, but my gosh, it's like so competitive there at the moment.
That's interesting, Shane. With those sort of numbers and potential offers, traditionally southeast Queensland hasn't done well in the auction market, but I think with those types of bids and things, is the market in southeast Queensland potentially looking to go that way?
Yeah, absolutely. I would be strongly suggesting auction as the method of sale. It's funny, most sellers still have that nervous, I suppose, thought of the added pressure of auction day, and they see a lot of results out there over a weekend. We had a sale this morning where the seller, and again, we can laugh because it's not always going to be like this, but we had an offer of, he wanted 500,000. We got 545. He said, stop, I don't want any more offers. I'm happy to take it. He was ready to do a nudie run around the local pub if we got over 500. And we ended up getting 565 or something like that at the end of it. So there's still phenomenal results being achieved. So long as you're negotiating well through private treaty method, it's still an okay method to sell. It's still a good method to sell, as long as you don't rush it. And as long as you get the volumes of people through, and as long as you've got an ability to handle multiple offers.
I think what might play into that, sort of traditional selling model a bit as well is we've come off so much uncertainty last year, and I guess a lot of people that may have been considering selling their home may have thought last year, gosh, my home value is going to go down? Is this, they might have been panicking. Now that we're at where we're at and the market is certainly strengthening and rebounding out of the end of COVID-19, I imagine that, expectations around what they hope to achieve, that's not that long ago that they were worried about whether they'd be able to achieve those prices. So to be able to achieve that price or maybe even slightly better is probably for them thinking, wow, this is great, let's take it while we can, not realising that potentially they could push that envelope even further.
Oh, look, a lot of conversations I'm having with investors that love a good chat and love to keep in touch in the marketplace, and I love those phone calls because it's, it's nice to be able to talk to investors and tell them, I don't believe we're quite at the top yet, and I think, why not hang on another 3 or 6 months? Very, very hard to pick the top of the market though. I've seen the boom of 2001, 2 and 3, and that was a phenomenal boom, and this one's probably better than those times.
Wow.
But the one thing we couldn't pick was the end of the boom, and it happened pretty much in a day or a week, end of 2003, all over.
Yeah, it's amazing, hey?
For us to predict what's going to happen ahead, I think there's a lot of legs left in the upward growth we're seeing right now.
Yeah, well, we were just talking about the difference between Sydney and Melbourne prices and some of the major regionals like the Gold Coast, and there seems to be a vacuum that still needs to be filled. That balance of scales hasn't quite happened. We were expecting, growth to happen. This has just, been breathtaking what's happened as far as, the energy that's moving into those regional markets right now.
Mm. Yeah. Well, that's sort of what we're touching on there, Shane, is the median house price difference with Sydney and Melbourne and South East Queensland. There's still that large gap. I haven't got the number to see where it's gone to now, but Sydney and Melbourne are moving again. So the gap's not getting closer, so that just helps affordability. And to be honest with you, I feel like whether those southerners have thought, lifestyle as well, I guess it's all those types of things that, the investors and the owner-occupiers. But where I'm going with that is the median house price has got to come closer together for Sydney and Brisbane, specifically South East Queensland. But, it's got a ways to run, as you say.
Yeah, absolutely. The data and the numbers tell us there's a fair way to go.
Yeah.
So is listings your biggest challenge, mate? Is that what the biggest challenge is, finding listings?
Absolutely. That's still the challenge. And a lot of the pressure on people not wanting to sell because they know they're going to sell their home and get a good price, then, not knowing exactly whether, be able to buy or they want to secure that next home.
Yeah.
Very tricky in this market.
Mate, I want to say something. It's just come to mind, and this is totally, out of, context with where we thought we were going to go today. I heard something the other day that stuck in my brain, and I just want to say it because the guys haven't heard this as well. I was talking to a gentleman from LJ Hooker Corporate, and he mentioned a particular chat forum or something, blog or chat forum that was online where someone said something negatively about you or your team, and I'm happy sharing it because what I learnt was the community just took that troll out, mate. There was literally dozens and dozens of people in the community that came on, and Shane didn't even have to lift a hand, open his mouth. No, they came in, the community came in and just went, that's not right. And it just is that's a real testimony to the, to the culture of what you've created and obviously who you are and what your brand is to that community, mate.
Yeah, really. Look, I had a few messages because I never had the ability to get onto the computer and check out the comment that was made. And by the time I got to the computer, I'd had messages from, friends, clients, staff. I probably got to the computer about 3 or 4 hours after it was posted, and it was quite enjoyable to see the support, I suppose, from clients, even tenants, landlords, just really supporting our business, saying, "Oh no, that's not them. They're better than that." Blah blah blah. And it was really, 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 really nice. In the end, the person who wrote I suppose the poor review removed it. I've dealt with that on the sideline. Again, I think a lot of the times, no one's perfect. There are times we all make mistakes, but at the end of the day, this one was one that was not really warranted, but was still sorted out in the background. But really good to see that support.
I just loved it. I thought it was a great story, and a lot of people are really worried about what pops up on the internet, et cetera, but when something pops up, to know that your community feels that strongly that they're going to come to your defence, mate, I thought it spoke volumes about you and your team, so congratulations on that, mate. Talking about your team, we know your property management team is, regarded to be they kind of set the bar really for property management, not just on the Gold Coast, but highly regarded throughout the whole of the industry. Mate, tell us a little bit about what they're experiencing with regards to rental demand, vacancy rates. What's happening in that regard?
Vacancy rates are still very low. So we manage about 2,000 properties across our group of offices, and we've got three teams, I suppose, across the between Nerang and up to Ormo. We've got less than 1% vacancy rate. Still getting great volumes of people going through the home. Conversations taking place at the moment with our property managers is all about the rental increases and being very mindful that if we've got homes going up, a $500,000 home going up 100 or 150,000, generally that'll equate to about $100 a week increase in rent eventually. Might not see it immediately, but I believe that our rental properties will go up $100 a week. I go back to my first investment property. I paid $100,000 for it, rented it for $150. I was getting $400 for it. I had a lady in there for 8 years, moved out last month, and I just got an extra $100 a week on that with a new tenant moving in last week. There's a classic example of that's a massive rental increase. I was probably a little bit kind to the lady, giving it to her for $400, but that aside, there was certainly, even if it was a $420, $430, it went up to $500 a week. So that's going to be a big struggle for tenants coming into lease renewal periods, where they're probably used to the old typical $10 a week increase, or even owners saying, "Look, I don't want to give them an increase. I like the tenant," but they really need to look at increasing rents, because if they only put it up $10 or $20 now for a 6-month renewal, in another 6 months after that, it could be the $100 difference, and it's very hard to put rent up $100 on an existing tenant.
Yeah. Shane, you just touched on there, we spoke about it earlier about seeing the rents going up 100 to 150. We might have lost you there. You still there, Shane?
Got you back,
yeah.
Just start that sentence again.
Mate, you touched on a point there about rent going up 100 and 150 and also getting some capital growth at the same time. Can you remember when you saw the yields and capital growth increase at the same time? Normally there's a lag. We're seeing that in the market.
There normally is a lag.
Yeah.
There normally is a lag, and I saw that back in 2001, 2 and 3, where it probably was 12 months later, where we're seeing rents go up, sale prices go up at the same time. It's a very unusual place we're in right now.
20 years ago, you're saying that part of the cycle then's the last time you saw that, and it's interesting.
Yeah, it is, and you're right. Yeah. I've been 30 years watching the market. I've never seen a time that has been through so many markets, prices are rising and rents are rising at exactly the same time, and there's a real crisis, I think, coming about. And of course, we, in the hats that we wear, and our investments of choice being landlords and so forth, there's a lot of great things about what's happening, but my heart goes out a little bit to the tenants, because I feel like we're on a path, mate, by the second half of this year that there's going to be a very obvious crisis situation where we just can't keep up with the demand on those rental properties. So it's a little scary at the same time.
Yeah, it is. It is scary. To be a tenant right now, start getting some savings plans in place. I think the biggest challenge is with the population growth of Southeast Queensland. I heard a number this week. I think it's 15,000 people move into the area per annum. Yep. Do we have enough developments to cover that? That's probably the biggest challenge. That's going to put pressure on existing homes. Putting more pressure on vacancy rates, and it's just going to be a very, very tight market.
And the issue for us, as we see it from our side, is even if we had 15,000 investors that wanted to build 15,000 houses, we can't get 15,000 blocks of land. It's just a real issue. Yeah. There's just such a, we've been caught a little bit by surprise that there's been such a swell of population, and we just can't keep up with it. That's the problem.
Well,
100%.
Don't talk negatively about it. It's fantastic.
On the positive side, you know, I mean, like I said, on the positive side, that means the prices have got to go up and rents have got to go up. There's no other choice. It's supply and demand, right? So if you're in the market, and I just think as an investor, man, you got to move quick. You know, if you're looking at buying a house, whether it's a family home or an investment property, you got to get prepared. You got to get your finance organised. You got to get your head right. You got to have urgency. You got to be prepared to get in an arm wrestle. You got to be prepared to. You're not going to go around and just kick a few tyres and think you're going to end up with a property at the moment. You've got to jump in and go, no, I've got to grab this. Grab the bull by the horns and get stuck into it. Or I'm going to miss out.
Because the market does. Just adding to that, the market can continue to grow. Strongly in a quarter. You can see big changes even since our last conversation, Shane. There's even I can see there's a bit more posture from you and understanding around capital growth and yields pushing, and that's, within a couple of months. Yeah. So the buyers have certainly got to be buyer ready. Is Gordy, getting all his clients finance tested and ready to go. You've got to take advantage.
Yeah, absolutely. Mate, look, I know that, one of our first conversations was because you are a landlord, you do understand the investment side of things, which not all agents do. Some people are purely in that, retail selling space, but your broadness of understanding of the market was, obviously felt very early in our conversations as you kind of tested me out a little bit to see where I was coming from and how sincere, this model was. And of course now we're, obviously closely connected through this joint commitment to try and protect investors. I know that a lot of your investors in your database are buying around Australia, not just locally, and that's why we'll be trying to provide more updates for them and provide a service that helps protect those investors. But we also know a lot of investors want to get into Southeast Queensland. Now, the markets you're in, mate, I just looking at them, Nerang, for example, those markets, when people come in from out of state, they realise that, man, you're like 20 minutes to nearly everything from that particular market. It's turned into not a market that felt like it was on the edge of town, like it might have felt like 20 years ago. Now it's like a prime area. Are you noticing a change of attitude about some of those markets that you're in?
Absolutely. There are people now that, I suppose accept is a harsh word on Nerang, but there's been a lot of change in 20 years as to where people might have wanted to live versus now looking here going, we'll happily live here. It's in our budget. It's still in our budget, and they know if they don't buy now, they won't buy in Nerang.
Yeah, I'm quickly seeing people that can't afford to buy in Nerang. So there's a real shift on, and I'm also seeing people come from other areas that aren't, they're not the local that's been, have got perceptions that are 20, 30, 40 years old, maybe generations of perceptions. People coming from out of town, they're looking at markets like the markets I know where you're at, and they are excited by, value that they see, because compared to where they're coming from, it's incredibly affordable no matter what the locals think, but just so convenient, so much access. It's a very exciting time, I think, for where you've placed your offices. Coomera, some of those areas, they're exciting growth pockets.
Mm. Yeah, well, that Coomera, Ormo, that northern corridor, is an exciting period. That's where the growth in the greenfield space has got to go for South or the Gold Coast. So you hands on there, obviously, with 3 offices in that corridor. So you're certainly placed in a good position as far as any growth that goes through there in the greenfield space.
And it's nice to finally see it. I invested into the Coomera office in 2004. So we had that town centre that was coming, and it was coming, and it was coming, and it was nice to see that eventually developed. But no, I'm hanging on to that Coomera to almost stretch. It's very exciting with what's got left to go down there.
Yeah,
absolutely.
It is primed to be a high growth area. So that's, it would be very exciting for you. Look, Shane, if you don't mind, we will cross over to you more regularly. I think there's so many little things that will come up in the context of what investors need to know about that I'd love to have the ability to come back every few months, get an update on what's happening in the market. I really do appreciate, your vision for, not just protecting investors, but like I said, just providing something that I think is a truly great service to the communities that you are in. So, mate, thanks for, looking after your clients and the investors that we happily recommend your way, your property management services and so forth. And thanks for your belief in the investor-approved model.
No, thanks for having me again on board, and look forward to it anytime. Always great to chat with you guys, and look forward to the next time.
Well, what an exciting market, guys. Eh? What a great operator too. Awesome bloke. I was, from the first moment I met Shane, I knew that he was a deep thinker, a very intelligent guy, highly experienced, and, he really did test me out with my knowledge about property investing nationally. I felt like I was going through an interview process when I first talked to him about building this investor-approved model, but as he peeled away the layers, I could just see him going, great, that's a great opportunity, and that's a smart way for investors to navigate the national property market safely. So he's a great resource for us, and I'm really glad to have him, in our community.
To think about, he's got 2,000 on the rent roll. He's transacting 100 properties a month.
It's a big player, right? It's a big business.
Yeah. And, that's those sort of numbers, and being able to touch and draw information from those guys is street smart.
Yeah, no, absolutely.
What we're about, I guess.
No, absolutely.
Yeah.
And I mate, the more I know about the markets that he's in, gives us such great feedback as to what's really going on the ground, which is so important for investors trying to make decisions.
My takeout was I felt the posture of how bullish he was around rental increases coming. There's some decisions there for current landlords, and then tenants not being, used to a $50 a week increase versus a $10 or $15 per week. So a bit of hurt there coming for the tenants, unfortunately. Good for the landlords, but in two factors, obviously yield going up, but then also finding that extra capital gain to, leverage and go again and continue to get in different markets.
Yeah, mate, it's all happening at the moment. There's certainly so much movement, not just in southeast Queensland, we're certainly in the regional markets in New South Wales, the regional markets in Victoria. It's spreading out of southeast Queensland, and southeast Queensland is now feeling like it's stretching, those boundaries. What we used to see as being, the energy got up about as far as Noosa. We're now seeing it push right up through Hervey Bay and, up to Bundaberg. It's exciting how we're seeing this area, this growth, It's amazing.
Oh, I'm looking at those markets daily, looking at the planning schemes and watching the uptake. Hervey Bay agent, project marketer there, he mentioned that in the last 3 months, they've on one side have sold more blocks in there than they did in the previous 12 months.
Amazing.
So it's happening.
It's happening. It's like the tap is turned on, and investors need to realise they're going to get caught on the sidelines if they don't jump in and start making some stuff happen.
Got to get active. Got to be, as an investor, if you're sitting on the fence, you're going to miss it.
You are. It's crazy. And Gordy, from your side of things, any last comments for the investors listening? Of course, Trent and I see the activity, and we see how hard it is to get the land and to get into quality estates. From an investor's perspective, what should these investors be doing, mate? Really, what's those next steps?
So the takeaway from that last conversation was, when they're having open homes, they're getting upwards of 20 offers on one property, like in one weekend.
Yeah,
that's frightening. So as a investor purchaser, if you're not ready, you're as you just said, we're going to miss out. So from my point of view, with the investors I'm working with, is the next step is let's have a chat to a broker. Let's work out exactly where you are today. What can you do? Work out what the numbers need to be for you. And let's target that round peg for the round hole. And, don't go out making offers and things that you don't know you can do. Don't get disappointed. Find out what your ability is. And, with the team we have around us, we can make sure we get the numbers right first, and then we know exactly what to target. And when we target that, we know that if we make a decision to go for that, that we can do it.
Yeah,
We're not gonna-
laser focus rather than shotgunning around and thinking that you've got, you can kick some tyres and, just play around and something will land in
We
your
don't
lap.
have that luxury.
No, it's just none of that luxury. The other thing is what we're seeing with investors is they now realise to get the maximum benefits out of being a property investor, to match up with what the government wants us to do in supplying housing, is the best of those benefits by far is only if you're doing a brand new property. The depreciation benefits and the way the government's now, changed the negative gearing laws in 2019, an existing home compared to a brand new home, there's a massive difference for cash flow. But that brings you back to the problem
gap.
that we've got with land, right? So,
Well, it's that land component that's increasing. The house is depreciating, but the land component's going up.
yeah, absolutely.
Yeah.
And unfortunately, there's not enough of it,
Yeah,
right?
yeah. Let me just touch on, or just finish that. Gordy's talking about the buyer rating and finance testing. It's not necessarily now because of this market. It's more strategizing across the whole portfolio, right, Gordy? It's obviously you're getting ready to make a next purchase, but when you're strategizing, you're taking into account existing potential properties in their portfolio, giving them forecasts, based on average growth. It's a strategy. It's not just getting
It's
ready
an
to
overall
buy
strategy.
buy now. It's an overall strategy.
Yeah, and I guess the big thing that, also comes into it because you do this so much, Gordy, and what you were telling me with some examples that you shared with me was, for most people, the difference between just jumping in and buying, what they can buy, by knowing really how to target the right property for them, one property can reduce the mortgage on your family home much quicker. The property that you purchase can actually make your lifestyle better, not worse. It doesn't have to be a big noose around your neck.
Not at all.
So many layers that you know how to dial up that a property no longer needs to be, I don't know, battling to pay it off and having this, lifestyle draining asset. It's now something that, with the interest rates where they're at, it's a vastly different landscape if you know how to invest properly at the moment.
Well, we're selling properties that people are buying as investment properties, but they're that good that they're thinking they could retire in those properties 5-10 years time.
Yeah.
So that's an exciting
prospect. It's even getting better because to get hold of the land at the moment, because it's so scarce, it means that the estates you're getting into, the quality estates, are mostly owner-occupier estates. You're not buying in a rental community, right?
No, that's right.
So if you're buying a house that looks great and these builders these days, they know how to build some really sexy stock, and you can say, well, that's a lovely property, but now you're also in communities where you go, wow, this is what they've got to do. The land developers, the parks, the infrastructure, the way they do it now, it's pretty amazing. You can see why they get excited about the potential of it being a family home.
Yeah.
Last comments, guys?
Last comment is, from
Giddy up.
all of our perspectives, we want to give our members, our investors, just an absolutely awesome landlord experience. That's my goal every time when I work with a client, is that I would just want to have a great experience, which brings in everything that you just said. It's adding to their lifestyle, not taking away from their lifestyle. You mentioned the client you were working with that, their focus was to pay off their principal place of residence. They thought they could only focus on that. But in a few conversations, they realised that buying that investment property is what's going to give them the ability to do that.
It's making it easier.
It's making it easier for them. It's not making it harder. It's making it easier.
That was a big breakthrough moment for that particular person in particular, where she was talking about, just got to pay down the family home. And I was like, well, the second you buy the actual investment property, you're going to smash your family home loan a heck of a lot quicker. I think it was 7 years shaved off it, $140,000 saved in principal and interest payment. It's crazy, but that's the sort of stuff investors need to know. The market's moving fast. There's certainly not enough stock to go around, and you need to be prepared to have layers of focus, get yourself ready, and get yourself, a team around you that can help you, go out there and, be competitive to get these properties. Or you are going to get pushed to the sideline. You are going to miss out.
That's it, mate. That's it. From my perspective, not strategizing with clients, but seeing what Gordy and the other strategists, do with clients. Sometimes I try and think back and think, okay, when I've guided a number of investors into a certain area, and I think, you know, if it's gone up 150 grand, you know, or a couple of hundred grand in a short period, I get chuffed about that. But at the time, I also think, shit, you know, people get active, mate.
Yeah.
Don't sit on your hands.
Absolutely,
Don't sit
mate.
on your hands. It's a, you know, as a very worst case, they take care of themselves. You've always got tenants. You're dealing with the best property, the best maintenance people, the best warranties. It's safe, very safe. And obviously, we're passionate about house and land, and the land component we're obviously, you know, believe in. It's just, I guess sometimes I think, just a no-brainer.
Yeah.
Come on.
Yeah, no, it is, mate. And I appreciate you guys joining me. I don't get to work with many investors one-on-one, but you do it all day, every day, mate. So I always love your input. Trent, I always appreciate the fact that you're the guard dog, the guy that'll get out there and fight on behalf of the investors to make sure that we're protected. And I really do appreciate everything you do. Hopefully the listeners got a little bit of good content out of today. I know going forward, I don't think we're going to see a better window to build wealth than through the 2020s. The interest rates, the market movement, the affordability of houses in the hotspots, the yields that we're achieving. It's an exciting time, guys. So thanks for joining me. We'll cover another great topic on the. Hopefully you guys will join me again. We'll cover another
good on you,
great
Phil.
topic.
It's exciting, passionate times. Because at the end of the day, it just, I guess, makes us look good as street smart property investors, and you know, I guess guiding people, holding their hand through these transactions, and it's
I'd hate to be doing it on your own at the moment.
Yeah.
All right, guys. Thanks so much, and thanks
Phil.
listeners. We'll talk again very soon. Thanks for watching, guys. Don't forget to subscribe, and also feel free to leave me a question. I look forward to helping as many property investors as possible. Take care, and we'll talk soon.